It's time to talk about people and talk to people who have their skin in the game. People who have invested in India, have seen what it takes to invest and would like to see a lot more. And it's a very special occasion because Sandeep Naik from General Atlantic joins us right here on ET Now. Thank you very, very much for being with us. A lot of people are talking about India, a lot of people are talking about macros, but as someone who invests in the Indian markets and Indian corporates, what's your outlook on India? What's your outlook on macros?
You know, there's a lot of talk of India on the sidelines of Davos, as you would expect, because if you think about the macro that's happening globally, India is a real bright spot in what's happening globally. Take a look at the US, what's happening with Europe with respect to Brexit, what's happening around China. People look at the Indian market and believe that it is one of the brightest spots in terms of investment destination. We as General Atlantic have been bullish about India for a very long time, and we think there's a 15 to 20 years of secular growth left in India. So we are extremely bullish on the outlook of India.
15 to 20 years of secular growth is a big growth to tap, but you have been growth investors, like I said, since the early 2000s. Has the India story peaked? And like you say, 15 to 20 years more left. $2 billion in investments. Where can those numbers go? And what will you be chasing?
You know, when you think about India, people talk a lot about macro, but as an investor, what we look at is beyond the macro. If you think about what's happening in India today, entrepreneurs are building India, and India is giving birth to entrepreneurs. It's a virtuous cycle that's going on because no other place in the world today is creating more entrepreneurs than India. When you have a climate where the governance is very strong, where the government is putting policies in place which are decisive, which are clear, and they're executing on it, and creating an environment for growth, entrepreneurs will continue to churn out great companies.
Right.
Our job as a result is very simple. Our job is to identify the best of the entrepreneurs, to provide them with the capital, to provide them with the intellectual power that we have of having an experience of 35 years of investing, and just make them successful. That simply is our job day in, day out.
Indeed it is, but are PE investors making the kind of returns that mirror the India's growth potential? If you adjust the market returns versus the rupee, that isn't really the case. But what about PE investors? How are you keeping your faith intact?
You know, if you look at the global equity market returns, compare them to India, the Indian returns do look a bit flat, especially for 2016. If you look at the dollar return, equity return in India, it was mostly flat, about 0.3%. But if you look underneath and look at private equity returns, I'll give you General Atlantic as an example. We have invested about $2 billion in India. We have exited half our companies and we have already returned more than $2 billion, exiting only half of the portfolio. So we have made exceptionally healthy returns because it's all about micro and not just about macro. It's about identifying the right entrepreneurs and helping them scale their companies. And that's what great growth private equity investors will do day in, day out in a country like India.
And someone rightly says the micros put together really add to the macro, and it's quite useless to just keep looking at the macros. But, you know, 2016 did see a fall in PE deals, in PE investments. What would you attribute that to?
You know, people were wondering as to
Despite a lot of entrepreneurs mushrooming.
That's correct. So the entrepreneurial energy continues to be the case. Private sector capex had stalled in India because the private sector companies were waiting and seeing what's going to happen on the policy front. I think you're going to see a renewed interest on the private sector capex playing out in the next few years. In terms of General Atlantic, we have a pipeline of at least 10 to 15 companies which we keep on our pearl list. These are companies that we want to back. These are entrepreneurs that we have tracked for a very long time. These are companies that we have full faith will produce great returns if we go and back them at the right time. We never see any kind of volatility in that pipeline. And as you can see, last year at General Atlantic, we deployed almost 20% of the global capital in India. And that's how bullish we are about the macro as well as the micro prospects of India.
So when you say you keep companies on your radar and are ready to invest if the need does arise, are there special segments? Are there special sectors that you keep a focus on?
So there are 4 sectors that we invest in as General Atlantic. Financial services, we are exceptionally strong.
Yes.
We have invested in companies like the National Stock Exchange, where we've been active for the last 9.5 years. We invested in IndusInd Bank. We have invested in India Infoline Wealth. We have also invested in a payment aggregator in the fintech side called BillDesk. So General Atlantic, a very strong investor in financial services. Again, when you come to technology, we have been exceptionally strong investors on the technology front in India, having backed all the early stage IT services companies when they sprang up. And most recently with Mu Sigma, with Citius Technology. So we continue to look at technology as a very key sector for growth. And I believe the time for internet companies to scale in India is going to be now. It's going to be the version 2.0, which will address the real Indian needs versus doing a cut, copy, paste model of what worked in the West. The technology we are very, very keen on investing in. Consumption, it's a consumption-driven economy. Consumer sectors are going to be blazing. Anything linked to an Indian woman, be it apparel, accessories, cosmetics, with more and more Indian women entering the workforce, that's a clear trend in terms of secular growth. And lastly, healthcare. The supply-demand mismatch is so massive in terms of healthcare in India that we believe that there are tremendous opportunities in healthcare. So these are the sectors that we think will continue to grow, and we are very heavily focused on these sectors for our pipeline.
So these are the growth sectors, but like your peers here in India, are you going to be looking at distressed assets? Is that a part of your strategy as well?
It's not, actually. We would not look at going in and buying distressed assets on the cheap, putting financial leverage on top of it and trying to eke out our returns. We have globally been growth investors. We invest in partnerships. We invest in people. We try and identify great people that will treat our money as their money and help scale companies. So we are growth investors. We respect the partnerships we get into, and we'll continue to invest behind growth in India.
So just to take your strategy forward, like your peers, will you be looking at a controlling stake, or are you happy being a stakeholder but not maybe a majority stakeholder?
Majority of the deals we do are minority deals.
That's right, yes.
And even if there was an opportunity to take a controlling stake in an asset in India, we will only do that if there's an entrepreneur that is still running that business. Maybe the rest of the business is owned by a financial investor, but as long as there's an entrepreneur that's still running that business on a day-to-day basis, only in those situations will we go in and take control. We will not be taking control in assets where the entrepreneur is exiting, because a fundamental principle of investing is investing behind entrepreneurs and management teams.
What are the exits that GA will be looking at this year? A lot of talk about Mu Sigma, and a lot of talk about the house of Anita Dongre, which has done traditionally well. And I'm going to come to you about the women entrepreneur in just a bit. But are those the exits on your radar?
Exits are something that we don't actively think about. As a fund, we are very different from every other fund that's active in India. General Atlantic has a kind of capital where we don't have closed-ended funds, and hence we are not forced to exit our investments in a defined period of time. So we can hold on to investments much longer and exit when the time is right. So whether it is NSC, Anita Dongre, multiple investments that we have made, CTS Technology, Buildas, we will work in that journey along with the entrepreneurs and figure out the right time for us as investors to exit the company, which would help those companies further scale up, but no current plans of exit.
I was just going to ask you that. Is the NSC IPO exit on the cards?
NSC is going public,
right.
which you've seen, and we will decide at that time if it's the right time to exit. I think that's how all investors would take their call.
And Vasan Healthcare, because you said healthcare is an exciting segment with the big mismatch in demand and supply. Is Vasan Healthcare and MedPlus on your radar? Was touted to be?
My background has been healthcare prior to coming into the field of private equity. I was a med device inventor. And so healthcare is something that's very dear to my heart. Rest assured, every healthcare deal that comes to the market, we evaluate it very closely.
I'm not doubting that at all. But a last question before I go. We've spoken about the macros, we've spoken about the micros, but what is it that you would want to see a lot more of? Where is it that we'll see GA veer towards in this market?
One of the things that has amazed me, and this goes back to my own personal experience, very early in my career, I had 3 different supervisors who were women. And it taught me a lot in terms of what a gender diverse community can do. When we came into India and I invested behind Anita Dongre and Anita as a person, I just saw the power of investing behind women entrepreneurs. And I think just as an entire investor community, if we can start backing women entrepreneurs and help scale those businesses, I think it changes the rubric through which we see the women in our society on the social, on the emotional, as well as on the behavioral side. And that would be very, very powerful.
On that note, we don't just make up for the fairer sex, we also, like you say, make up for the better sex. But thanks very much, Sandeep Naik. It's been a pleasure chatting with you right here in Davos.
Thank you, Supriya.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.